Hello everyone, welcome to elliottwaveforecast.com YouTube channel. So today we are going to give an update on the stock of Chevron. CVX is the symbol here. So we're going to be looking at the long term for this particular analysis. So we have a monthly time frame here. So we can see that we have a clear structure here, right? So we have a rally from, let's call it from the all-time low to this peak here in 2014, right? And then from there we got a big three swings pullback. Now this is obviously the correction. This big three swing here is a correction of this entire rally that started from the all-time low, right? So, and this one was a clear three swing without any question. So you can see that the rally, impulsive, correction, three swing, ended here in 2020 during the COVID-19 sell-off, right, at $51. And then Chevron managed to rally very quickly and break to new all-time high, right? So obviously that means we have started the next leg up. And that actually, this monthly time frame is telling you what is the long-term direction for energy stocks, right? Now in this case, obviously, if you're looking at multi-years and maybe a decade, this is extremely bullish. Now that doesn't mean we cannot get a pullback from now and then here, for example, we can continue to see for the downside still, but overall, if you're looking at from the bigger perspective, this is as bullish as it gets against this 2020 low, right? And so we are starting what looks to be a wave 3, which is going to be a very bullish move to the upside. Now, from the 2020 low, we rally also very impulsive, right? And then now this is a monthly time frame. Let me go down to the lower time frame now, which is the daily, and I want to look at this and this and this, in particular this move here. So if I go down, so this is the move that I'm interested here, this and this, right? So you can see that the entire rally is impulsive. So there's no question what should I label, right? I mean, that is an impulse and it continues to make a new high, so I have to label on the move up as an impulsive structure. So either with 1, with 3, with 5. And going down to the daily time frame, you can see that the last move here, this one looks to be a 3 swing, right? I mean, it looks like a 3 swing. It's not a 5 waves. So you don't end an impulsive structure in a 3 swing, right? An impulse will have a subdivision of a 5 waves, but this one is a 3 waves. So what this looks like at the moment is that this is doing an expanded flat, because this one makes a new high above here, but the subdivision is only a 3 swing. So that most likely then with 1 of 3 ended here, and then we are doing a flat, right? We're doing a flat because you don't end an impulsive structure. So you cannot label this with 1, with 3, or with 5 when the subdivision is only 3 waves. So that leaves us to this option that, okay, then that means with 1 or 5 of 1 ended here, and then we're actually doing an expanded flat with this marginal high here, subdivision only 3 waves. We can label this as AB. So now doing a C leg. Now within the C leg, it should subdivide into 5 waves, right? Because it's a C leg. Now we technically already have a 5 waves. So we got a couple of different possibilities here. We got 1, 2, 3, 4, 5, right? We got a 5 swing here, down from here. Now we can either continue to extend lower, right, within with 5, like what we're showing, or now if we're doing that, we're gonna get a few more downside, which will last a few more months here to finish the C. And remember, if this is doing a wave to pullback, we got time and also space to do further correction. Doesn't mean it becomes bearish, but we do have enough time and space to allow more downside with the stock so that it can correct this entire rally from 2020, right? So it is bullish against 51.6, but in order for the intermediate degree, we got a couple of options, and the primary view here is looking for the downside within the wave 5. We can also do something like this. In other words, we could be ending with one of C over here, which is really not that much different. I mean, but I can label it this way as well, right? So you end with one, so that means the rally is going to be a bigger rally, correcting this entire decline, because you're going to be doing a wave 2 rally correcting this entire decline. So it's going to be a bigger rally before it goes down again in 3, 4, 5, right? So that's another option. And then okay, the first option and the second option, not really that much different. This still implies for the downside, right? This is the first option like this. So we get 1, 2, 3, 4, and what we're doing here is just extension lower within the 5, right? Which also suggests for the downside, but the rally in this particular case is not going to be a big rally because it's only correcting this wave 1 here. So the wave 2 here is only within wave 5, right? So it's only correcting this wave 1, not correcting this entire decline this way. So this is another option, which is the primary view. And then the third option is that because we already have a 1, 2, 3, 4, 5, we could be ending C here, right? If we end C of 2 here, that means we will not see another leg lower, and we're just going to rally from here. Now if C of 2 ended here, this is what we call a running flat, right? A running flat is characterized by the idea that the C does not break below the A. So running flat will be A, B, C like this, and then we'll just rally higher from here without any further downside. If it breaks below A, that is called an expanded flat, right? Now running flat is another option if it doesn't do further downside. But again, whether we are looking for this, which is the primary view, or looking for wave 1 ended here and do a bigger rally and down again, or running flat, all of them suggest the same thing. As long as we stay above 5160, eventually, ultimately, Chevron is going to continue higher again, and eventually it's going to make a new high. But for now, we're still allowing for the downside because running flat is also a little bit too shallow. I mean, in a very bullish market, that could happen, but you know, like if I measure the retracement, right? If I measure the retracement, and let's say I use with one where we end here, like this. Now, right now it's at 23.6. Now, typically that will be too shallow to end with 2, right? With 2, typically I would say expect at least 38.2 or maybe sometimes even 50%, 61.8%. That is usually where wave 2 is usually ending. 23.6 typically is what you use for a wave 4. But in this case, if we are calling it wave 2, then I think it makes sense we can see a bit more downside, maybe to 38.2 or even to 50% before we start to turn higher again. So for now, another downside or further downside is possible, but overall we are bullish, and as long as we stay above this 2020 low, eventually we're going to rally again in Chevron and makes new all-time high again. All right, so we don't cover these stocks in our service, but we do cover other stocks and ETF and indices. If you do want to check our service and what we cover, feel free to check our service. We have 14 days trial. The link is in the description of the video. So I'll see you all again next time, and have a nice day, everyone.